Hi guys, welcome to the channel. My name's Tim, and on today's episode, I'm going to make the bullish case for Bitcoin over the next decade. Now, I've got some really critical information here involving gold, the NASDAQ, the Dow Jones, and Bitcoin, and I'm going to tie information together from all of these sources and put together this case. So this is a big one. So, in a nutshell, very quickly, I think that in the short term, we are going down. I'm pretty bearish in the very, very short term. I think we're on the way down, but I think we've got time for another peak in the next couple of years. And the reason for that is I don't subscribe to this Bitcoin halving. Well, I shouldn't say I don't subscribe, but I have what I believe is a better theory on what causes the Bitcoin cycles. And that is the natural bounce that we see in the markets in general. So we think of the markets as like a mall, and Bitcoin is one store in the mall, and the Dow Jones is like a group of stores in the mall. And if you look at the Dow Jones over 100 years worth of data, you can see there's actually a 4-year cadence that it actually bounces. It bounces off the moving average every 4 years like clockwork, and it's been doing that since 1950, okay? Now, the NASDAQ does the same sort of thing. And I've got a close up here of the NASDAQ. You can see the dates all line up. We've got around we're 2008 and then 2011, which is close enough to 2012, 2016, and 2020. And these are the dates when Bitcoin also goes up and then comes back down, goes up and comes back down. Okay, and now right now, Bitcoin's gone up. We're looking at the NASDAQ, by the way, but Bitcoin has gone up with it, and then it will come down in probably 4 years, around the year 2024. So that's my theory. And I've got other videos that go into much more detail about that. Now, the problem with this is that where is it? The Dow Jones. The problem is that Bitcoin has existed here. It's existed within this region of time since the 2008 financial crisis, and it's been in a massive bull run. So this is the stock market, the Dow Jones. And Bitcoin and crypto, which is a speculative asset, has thrived during this time, okay? And it's little wonder because speculative assets do well in bull runs when there's a lot of positive bullish market sentiment. But what happens when the stock market isn't in a bull run and is going, say, sideways or going more bearish? And trust me, there are large periods of time where the stock market does not go up. Look at this. From 1966 to 1983, the stock market, this is the Dow Jones, went sideways for 17 years. Can you imagine that? And look at these crashes. Imagine having money in the stock market during that period and just going through crash after crash after crash and not actually really getting anywhere. And then around the year 2000, we also went sideways for about 11 years there as well. We had the big financial crisis crash. But if you bought here and sold here, it's roughly the same price. Now, and I've got another video on this. I'm predicting that we go sideways again in the next decade. And that was scary. That's very scary. And I'll quickly show what I mean. So I go into much more detail in the other video about this. But I think we are likely to do something like this, where we're going to go up and crash, and we're going to equalize here. Okay? And what I mean by equalizing is that's when the long-term moving average, so this red line, which is the 25-year, this blue shaded area, which is the 30-month or 2.5 year, and the price action itself, which is a monthly average or a monthly price, they all converge together. You can see this, they all equalized at this point, and then we had a 17-year bull run. Fantastic. You go back in time even further. This is following the 1929 crash, the Great Depression. We equalized right here. All three came together, and we had a massive 17-year bull run also, okay? So we haven't actually touched that we haven't had an equalization like that for about 40 years. So the last time, the last difference was 37.5. So we're actually a bit overdue. And to give you a bit more evidence here, check this out. So this is around the year 2000. We started to come towards the moving average, okay? So we came down, it came down. Now, we probably should have come down to it one more time, but instead, we went up. And I'll show you what we should have done to make sure the market was nice and healthy. We should have, like in the 60s here, we came down, down, and then we touched it, then we equalized. Now we haven't done that, so I feel we're living on borrowed time, and I go into much more detail in my other video. I'm racing through this really quickly just to set some basic context, okay? So I think the Dow Jones is going to go sideways for the next 11 years to around 2032. And I believe the NASDAQ, which is the tech stocks, is going to have a crash and may do something similar. You can see right here, it's looking very similar to the beginning stages of the dot-com bubble. We're not quite at these high levels yet. You can like these levels of extension, but with more businesses reopening and more money in circulation, I think it's very possible that we have some sort of parabolic run. And you can see here, the moving averages here are sort of moving further apart from each other. So I don't think we'll crash all the way down to this moving average. We've actually touched it, which is actually quite healthy back here in 2008. But I think we're going to end up somewhere in this region. So the NASDAQ, I believe, is going to have a tough time. This is all speculation, of course. The Dow Jones, I believe, is going to have a hard time and go sideways. So what does this mean for Bitcoin? Because Bitcoin's only existed when there's been a bull run. And what is going to happen if it's during another period of going sideways for 11 years, which has never been tested before? That's never happened, okay? So what is going to happen? Well, check this out. I stumbled upon the gold charts. And look at these dates. You couldn't script this, okay? Look at this. From 1966 to 1983. And just remembering that period is this period here, when the stock market went sideways. The stock market did nothing between those dates. 1966 to 1983, it went sideways. All it did was go sideways and crash. Look what gold did. Gold went up 1,860% over that time. And then between 1983 and the year 2000, okay, gold's not doing anything special. If anything, it's going down slightly, but basically going sideways. So in that time frame, 1983 to around the year 2000, we had a 17-year bull run with the stock market. It just shot right up. Look at that. Even the 1987 crash, which occurred here, just basically came back to the moving average. It was just a minor correction. So we didn't even have a proper crash. So that's extremely healthy price action between 1983 and the year 2000, okay? But look what gold did. Just went sideways, did nothing. And then from the year 2000, straight after the dot-com bubble, to 2011, when the stock market went sideways for 11 years and did nothing, and again, we just had lots of crashes, what did gold do? Gold went up 600%, okay? And now, in the last decade, the greatest bull run, even though it's short in terms of time, but it's high in terms of cost, the greatest bull run in stock market history, okay, over the last 11 years, the stock market has gone up, and what has gold done? It's gone sideways. It had a dip, and it's sort of come back here again. So, what this is showing is when the stock market goes up, gold stays stationary, and when the stock market is stationary, gold goes up. Okay, so with the assumptions that I've made before about the stock market going sideways for the next decade, with both potentially, at least with the Dow Jones and maybe with the tech stocks, with NASDAQ, this is all speculation, remember? There's no guarantees any of this will happen. But if the stock market goes sideways for the next decade, I'm predicting, based off past history, gold will go up during that time, okay? Now, what does this mean for Bitcoin? So there is a very strong narrative that Bitcoin is digital gold. And there's lots of debates online. And, some people even argue that Bitcoin is better than gold in that it's logistically easier to move around. If you're going to move bars of gold from one country to another, that's a logistical nightmare. You need security, you need trucks, you need boats, you need planes. If you want to move Bitcoin, it's like a $30 fee or something like that. It can be done within an hour or so. It's no big deal at all. So they've both got a limited supply and so forth. So with that narrative and with that assumption that Bitcoin and gold are similar assets, we might see, if the stock market does go sideways, then hopefully what that means is Bitcoin may go up along with gold over the next decade, okay? And if Bitcoin goes up, it brings the altcoins with it, so crypto in general. So if this assumption is correct, and we don't know, because Bitcoin has not existed in a time when we haven't been in a stock market bull run. So what happens when the stock market goes sideways? Will Bitcoin, being a speculative asset class, will it do what gold has done? Now, gold's been around for thousands of years, okay? It's got a proven record. So there are still unknowns. We have to remain cautious, but there's a little bit of optimism there because we know that the younger generations probably are more likely to buy Bitcoin and crypto than they are to buy gold, okay? So as the generations change, we might have more emphasis on Bitcoin than gold in the future. So it's really exciting. So we might see a chart that looks something like this during the next decade if the stock market goes sideways and if Bitcoin acts like gold. So there's two major assumptions, and we don't know if that will happen. Okay, so it's something to keep your eye on, but it does give me some bullish sentiment about Bitcoin over the next decade. All right, so that was an explosive episode. I went through probably too much information in too little time. I've got lots of other videos that explain all these concepts in a lot more detail. I was trying to rush through it today. But I hope you enjoyed the video. Please subscribe, like the channel, share it if you wish. It'll help me out, of course, blah, blah, blah. And I'll see you in the next one. Cheers.